Welcome to Super Money. How many of us are prepared to answer this question? How long do you think you will live? Or how long do you think you and your spouse will live as a couple? Or how long will you, your wife, and a dependent, maybe a younger brother, younger sister, a child who can't earn, right? Somebody, how long will you all live? Because your money has to last that long. The problem is none of us have an answer to this, but every one of us have to plan for something. So any good financial planner or a financial advisor sits with you, thinks and talks about investing, makes some assumption about inflation, some assumption about equity returns, some assumption about debt returns. And normally the money is likely to last till maybe you're 85 or 90. But rarely will somebody provide for something beyond that, right? Very unlikely. So is there a solution? What is the solution to this, right? So when I was once in Lucknow or Kanpur, I'm not sure, I think Kanpur, I asked in my class, how long do you think you will live? And one boy got up and said, sir, I don't know about myself, but my neighbor is 114. I have attended 5 funerals of people above the age of 100, and all this has happened in the recent past, maybe in the last 5-6 years, right? That is huge, right? So the question is, all financial planners would plan for something, some assumption has to be made, 80, 90, 95, but very few will actually go beyond 90. Right? 85 is the best, but they will say, oh, your wife is 5 years younger, so till your age of 90, which means your wife is 90 from 85, or if you think your wife will also live till 90, then maybe your age of 95. That's the maximum I've seen a financial planner go to. No financial planner goes to 114. Is there a solution available for this? Is this a problem? First of all, I don't know whether this is a problem, because when you talk to people, they say, oh no, I don't think so, with so much of pollution and so much of stress and such poor habits, dietary habits and drinking habits, I don't think I will live that long. But the same person, when you say, oh, if you don't think you're going to live that long, why don't you make your will? Then he or she gets into a defensive thing saying, kal, parso, so they don't know when they're going to die. None of us know when we are going to die. But are there solutions available for this? I think there are some solutions available which may look expensive, but if you have the money, these are good solutions. These are exactly, I'll tell you what are the solutions. So you can buy a deferred annuity when you are in your 60s or 70s and you realize that your money is much more than what you need, and then you take one annuity starting at 85 and one annuity starting at 95 or 92 or whatever. Then what happens is, this is over and above the other annuities which you may have taken, which is already paying you. This one will start at 85 and one will start at 92, let's say. The advantage is, first of all, it looks like a sheer waste of money, because what if you don't live that long? Well, you can put a clause saying, I want return of premium, so then it may not be too bad. You'll get back something, at least the premium paid you might get back, or some discount to that, but or the price could be a little higher. But some money you will get back. Or you look at it and say, look, it doesn't really matter. I have about 10 crores. I need only maybe another couple of crores till I'm 85. So let me put away 50 lakhs for a pension starting at 85 and another 50 lakhs for a pension starting at 92. Is it possible? Yes, it is possible. Is it a waste of money? Well, it will look like a waste of money if you die when you're 84 and you feel, oh my God, I wasted this money. But we are the same set of people who took term insurance, and then we are not cribbing about living through term insurance, right? My term insurance plan got finished some time back, and I did not surrender it even though I was financially free. So I just let it run because it was a small premium, and I said, let it go on. It doesn't really matter. But today I don't have term insurance. I don't need term insurance. So you have to look at this long-term annuity more as an insurance in which you will get nothing. Right? It's like your home insurance or your medical insurance. You don't want, or your car insurance, you don't want to claim. You don't want to claim a car accident insurance just because you paid the premium. You don't want to make any health. I mean, I have been paying insurance premium on my health for the last 17-18 years. I have not made a claim of even 1 rupee on that, right? So maybe 20 years I have been paying the premium, or maybe longer. And I have not made a single claim. Do I crib about that? No. So that is exactly how you should treat this deferred annuity, one starting at 85 and one starting at 92 or 93. As I can also tell you one thing about annuity, which your other advisors are going to tell you. It is the most expensive product. It is not a good product at all from the from your point of view, from the investor's point of view, or even from the distributor's point of view. The distributor also makes very little money on that, so he is also not keen to sell, at least in India. He is not too keen to sell an annuity because his commission is not some 25%. His commission is pretty low. And so the manufacturer makes some money, but the manufacturer is not keen that you buy, the distributor is not keen that you buy, and you are not keen that you buy. It's a horrible combination, but it's still a good product. It is exactly like term insurance. Term insurance, at least the manufacturer wants you to buy, and for you it could be useful if you pop it when you're 32 and your wife is pregnant and you already have one kid. You want some money for your wife to hold on for the next 10 years maybe, during which time she does not need to take on a job. So exactly like that is what you should look at this annuity. It is a completely useless product. It is very expensive because whatever you get back is taxed at full rates, and it will start paying at 85. So whether you need that money, maybe your portfolio has done extremely well and you don't need the money, but it will still start paying you from 85 and you will have to pay the income tax on that. So it's not a tax efficient product. It's not a cheap product. It is an expensive product. It invests in government securities, so yields are low, and whatever you get back, right, is fully taxed at maximum marginal rate. So there is nothing positive going for this product, except that in case something happens to your corpus and you run out of money, this will start paying from your age of 85. Another one will start paying from the age of 92 till the end of your life. So by chance, if you live till 114, chances are at least you will get some cash flow. It may not be great. If you if something happens to the stock market and your portfolio goes for a toss, yes, you will still get some cash, and this is one fantastic asset which can never go to zero in your lifetime. So you can buy with return of premium, without return of premium, and on death pay to your son or granddaughter or whatever. And you could buy a more expensive one, or you could buy a cheaper one. Let's say you got 10 crores, you put away 1 crore for the 85-year-old and one for the 92 years plan. So you put away 2 crores. It doesn't matter because you have excess money. Maybe your children don't need the money, your grandchildren don't need the money, so this was useful. So don't treat it like an investment product and say, oh, the ROI is not good, I'm not getting anything great, it's a bad, I've already told you it's a bad investment product, but it is a fantastic risk product. This is exactly like term insurance. The ROI on term insurance is really infinite if you die after one premium that you pay, right? Suppose you paid a quarterly premium. You had a 1 crore term insurance, you paid 1 quarterly premium and you died. Your family got 1 crore. That is huge because you must have paid maybe 800 rupees, right? So that ROI is huge, but you don't buy these products for ROI. You buy these products saying, in case there is a problem, then let me have some protection. This is like saying, oh, I got too much money in US dollars, let me take and keep some money in gold. You're not doing because you think gold is going to give you better yield than US dollar. You're just diversifying your risk. In case something goes wrong with the US dollar, you're protected because that gold is not a fiat currency. But if nothing happens, you're still prepared for the worst. That's all. So maybe your portfolio has done extremely well and you get very good dividends and you don't need this at 85. Your portfolio is giving you enough dividend yield. But in case it doesn't, right? So every insurance that you take is in case there is a problem. So you take car insurance. I've taken car insurance, never made a claim. Right, I have taken life insurance. I don't know whether I'll make a claim because all my term insurance is over. Right now I have is my endowment plans which are going on and they're insignificant in terms of value. So some of these things you take because it is nice and customary to take, hoping that you don't make any claim, right? Thank you.